Hello everyone, this is Teddy Keckstaff from Forex Trading Unlocked, and we are here on Monday, November the 16th, 2020 with a live weekly Forex market analysis for you for the week of the 16th through the 20th. And before we really get into anything, we want to pull up our disclaimer just to remind you that this webinar is for educational only. So we also want to do one quick plug for the book High Probable Japanese Candlestick Patterns, which is available on Amazon.com in Kindle and paperback versions. We have a couple trading signals that you can learn about in that book that we're going to be going over today that happened to have occurred in the Forex markets recently. So back to our live action screen. If you haven't subscribed to our YouTube channel, please do so now so you'll know when these are coming up. So we have the Forex-Trading-Unlocked.com website pulled up, and from our Market Analysis and Education tab, we have our Workstation tab already pulled up. We have the U.S. markets that have just recently opened. Today's numbers for the U.S. dollar, obviously, are retail sales. We have export-import numbers for Japan, which is a little bit, I wouldn't say that important, but it is something to kind of pay attention to right now for the Japanese yen. Tomorrow we have on Wednesday, we have CPI for the UK, so the British pound, and we'll have that, plus the PPI for the British pound. Then we have a couple euro numbers, but more importantly, we have Canadian CPI. We'll be going over to Canada also as well today. We have housing starts and permits also going on for the US dollar. That'll be a big thing for Wednesday. And then we have on Thursday, let's see, we have, if I remember right, it's not, there's the existing home sales. That's the number to watch. Could get the bond market and the currency market moving around a little bit, plus the CPI for the Japanese yen as well. And then we have, let's see, on Friday we have sales for the UK, which will also be very big. But consumer confidence, I think, ending the week could shake up the euro. With it's not so much what the expectations are, but if it does continue to be in a negative slant with growing margins, I would say that we're going to see a big shift in probably the euro US dollar and the US dollar Swiss. Maybe not so much the pound, but definitely those two could see some action on Friday. All right, now we have the dollar index pulled up here. Let's expand our chart a little bit, make this a little easier for you viewers to see. Oops. All right. So dollar index had set off a bullish engulfing line buy signal a few days back, and it right now is pretty much trading where it settled the week, right around 92.72. I'm not expecting much action in the early morning today. However, I do see that we could probably, like I said, with some of those numbers as we head into the week, start to get a little bit more volatility. Not like volatility is something that's lacking, but we're getting off of just the coronavirus stuff. We definitely have more fundamentals that are coming into place with the currencies as we head into the end of the year, especially because we have Brexit to finish out, which is going to be all about getting trade deals established between the UK and countries around the world, including the US as well as the EU. It looks like they're going to do a rush Brexit, so we'll see what happens. We're going to put a vertical line here for Brexit just so you can see how much time we have. So where does this leave us? Well, right now we're going to use key off of the low that was set with this bullish engulfing line buy signal the other day, and that's where our directional bias will remain. We have a very, very slight slope here for support that's increasing. We do have this downward sloping resistance from the beginning of the wave down for the dollar index that goes all the way back to May. So it is kind of, I would say, wedging by attrition as we head into Brexit, but before we get there, I think we're going to either test new lows or break out to the upside. I'd key off of the high from 2 sessions back on Thursday to for if we get above 93.20 in the dollar index, it's a good chance that we'll most likely be pressing this downward sloping resistance line. The key breakout area would really be is if the dollar index could get above this area, this 94.34, because you had kind of a double top here when we were making lower move lows and lower move highs. Now we still have been making lower move lows and lower move highs, so until we really take out that 94.34, don't expect to see any really major bullish action in the dollar index. But it does not mean that we may not be having this set up to have this occur. So we do have a sell signal going on in the euro US dollar right here. This is a bearish engulfing line right here. This one, this little red line. Now we came into this little support term bearish target area already. I still think we're going to fall back into it and make newer move lows. Most likely until we get to Brexit, which is here to deadline. We're going to trade it between this 119.21 and 115.98. Now, I think that besides the fact that we've been in that range for most of the last couple of months, I think that there's nothing really that's earth-shattering that's going to shake up the euro from this area. Now, why is that? Well, remember we have this. Let's get this down a little bit more. There we go. Okay, so from this range here up to here, this purple zone, I don't see us really breaking out of that for any real major reason. Just like we have the dollar index coming down with its support and very short resistance. This downward sloping resistance right here is kind of our buffer zone. We have been making higher move highs and higher move lows, so even though it's not really bullish, it is doing what is considered the main fundamental of a trend, right? Higher move highs and higher move lows for a bull trend. So as long as it's doing that, we have to assume that it is a neutral to high. But right now it has the correction and rumblings of being neutral more than bullish. So that would also have it kind of bearish in the short run, a very short run on the more couple days wise. So we'll see how things shape up today. Like I said, we already came into our target zone here. So the question is how much further can we press this move? So only if we get above 119.21 do I see us really starting to break out again. And even then, I think we'll be spiking and falling back more than anything else. But even if we have a dip down towards this 115 area, I wouldn't get too grounded in the fact that we have a bear market with the euro US dollar. So we need to have something that shows some real confirmation of US dollar strength before we would get excuse me, overly bearish the euro US dollar. Now with the coronavirus lockdown and Brexit coming up, there's a lot of things that they're going to be rushing through, which is kind of good because they're finally doing something, not just because they have to, but because they have the coronavirus motivator, because they have other issues they need to tend to and work together with. So I think that it's going to benefit the swing traders that are more on the intraday and range traders. If you're a longer term trend trader for the euro US dollar, you may be in for a lot of chop for the next couple months. Now if coronavirus excuse me, really hits Europe hard and they go into some major lockdowns where they're saying they're not going to open up for like 6 months or something like that, 8 months, which probably will be next step, I guess, in global lockdowns. If that's the case, then I would probably see the euro tanking versus the dollar, because you'll probably see flight to quality where dollar will be supported in that situation. If things get that grave around the world, the Swiss will be supported to some degree. We'll be looking at that in just a couple minutes. So very neutral to bearish in the short run. We did hit the short-term bearish area, so we got to key off this range. Not much expectations here right now, and that's because of the global political landscape that we have to deal with. It's not just the U.S. elections, that's for sure. So now we are looking at on the pound. Actually, what we'll do is real quick is go back to the dollar index. So remember how we spiked here? This is the same day that we had the sell signal in the euro. So these are all reinforcing each other. So we'll see how this kind of interplays with each other over the next few sessions, but I think that we have a good mounting point for where we have a turn going on. The same thing is having here with the British pound US dollar, obviously. Now, as far as Brexit is concerned, the climate between the US and the UK is not so riddled with strife. It's probably going to be a pretty smooth transition. It's most likely the UK trade deal is going to mimic what we have that Canada has with them and that we have with Canada to most of a degree. Wouldn't expect much craziness there. However, in lieu of the lockdowns and everything else, we did have a short-term sell signal up here. This is another high probable Japanese candlestick pattern. It's called dark cloud cover. With this little slide here, we still have a little more room to the downside. Now, the market tried to be higher today with the bulls grabbing the bull by the horns, no pun intended, to get the pound US dollar off to newer move highs on an intraday basis. But as you can see, as of the U.S. market opening up, that it's relatively flat. I would say that most likely, even though this has been making higher move highs and higher move lows, that we are getting ready for the big neutral to lower trade. And not that it's bearish, but it's setting a lower range until these agreements and things get done. We have the U.S. elections that most likely will not be decided until the December 1st. Could be a little bit before that, but we still have one more day where votes are coming in. So, so until after tomorrow, tomorrow in the mail is done, basically Wednesday, we know that's when official counts will be locked in, and we'll know by December 1st for sure. Not much to interfere with the pound US dollar. So like I said, with the euro under pressure, not that there we have dollar bulls going on, it's going to be really hard for the pound to gain momentum to the upside. So I think it's running out of gas here. We'll see how it today. Like I said, right now it's pretty neutral. I wouldn't expect much more out of this today because the European markets are closing soon. And I think they want to really get a good view of what's going on in the United States with as we start this week for the as far as where the global currencies are going to be going. So the U.S. dollar is Swiss here. Excuse me. Haven't been talking much this morning yet. U.S. dollar is CHF. Let's get the symbol right. Okay, so the Swissy here has been in a very bearish way for quite some time. Last week we had this buy signal here. Now this is a bullish engulfing line, all a monster rally. This is something I think you really have to consider when it comes to the dollar putting a landing point as far as how far it's going to go down. So not that we're bullish the dollar, but I think you've hit the, especially with the coronavirus thing going on. So if we have Brexit going on, even though it's not really totally involved, but it does affect the Swiss. So we're getting close to that deadline. I think that the low we have planted here last week is the extreme for any bearish sell-off as far as the dollar versus the Swiss. And that also means what? If the dollar is now grounding itself versus the Swiss, and they're both flight to quality currencies, it's very likely that that's going to confirm more weakness in the euro and the pound versus the dollar, at least in the short run. So I would key off of the high from from last week here around 91.89. Anything above this would be a nice bullish breakout, confirming strength, meaning higher move highs and higher move lows, which would mean neutral to Swiss, and that would also most likely add a little bit of pressure to the pound and the euro as well against the dollar. We'll see how this manifests. Key off of that high, like I said, from last week. Now remember, we had a big rally to start this move back. We set a lower move low, and yes, last week we made a lower move high. So that's why that high is key. If we take that out, that is our breakout point and our confirmation of a new potential trend. So now let's go skip across another pound and go to the U.S. dollar yen. This one also on the same day as the dollar index turn. The funny thing is, the day the dollar index turned, the biggest move was in the yen and the Swiss and a couple other markets. It wasn't in the pound or the euro, which are the biggest components of the dollar index. But when these currencies plant, that means that most likely you're going to have a big trend with multiple currencies in one way versus the dollar, meaning that they're going to probably be under pressure. Is it the coronavirus lockdown? Is it because this trend has been going lower for so long? It could be all kinds of things. There's all kinds of fundamental and technical reasons, but who cares? We got the signal, and we're looking for it to go up now. Now, U.S. dollar yen is right here in this little middle point here. So coming off of this major rally, the trend has been making lower move lows and lower move highs. So if we just set a lower move high, so it's the key area. If we break out to this upside target range, this confirms our change in direction for the U.S. dollar versus the yen. Now, there's a lot of reasons why Japan, especially because, see, the yen, they don't want the yen to get too strong, especially right now where exports have been decreasing and global demand has been down because of the coronavirus. The Japanese economy, to keep the Nikkei from falling apart, has to keep the reins on the yen. And the yen's been getting very strong versus the dollar through this whole thing over the past 6 months. And I pretty much think that this bullish engulfing line buy signal isn't just profit taking from the bearish trend that's been going on, more where it's actually a buy by the Japanese banks, because that's one of the things that they need to do to keep their economy from slipping any further than it has over the past few months. So that's just a fundamental reasoning that governments do this to help their economies along and protect their own currencies. Is that what they're doing? I don't know. We'll find out. I mean, there is some measures that they've been doing that definitely has it in that direction. So we'll see if they continue to follow through, and I think that we will, because you already have the Brexit stuff going on. You have the U.S. election stuff. So one thing they can control is the fact that they're not in any chaos when it really comes to anything. They're dealing with the global situation, but they're not in any chaos when it comes to anyone dealing with them. We don't have any issues with the United States and Japan. Japan doesn't, except for China. They have some issues, but as a whole, they don't have any of those geopolitical issues going on. So they're kind of neutral. But I do think that as we head into global lockdown, dollar like the Swiss, now the yen is a flight to quality currency, so it's not, you're probably not going to see a major rally with the U.S. dollar versus the yen. But I think that even the Japanese right now will be buying dollars and selling yen in the wake of a second major wave for the coronavirus globally. So now let's go look at the Australian dollar, U.S. dollar, which this one has definitely been a wild ride as of late. Now this has failed to make longer term highs, but it has been making. It made a higher move high after planting a higher move low a week and a half ago. So I would say this is in the big sideways. And the one thing you have to really think about fundamentally is Australia's biggest challenge now is the fact that they're getting cut off by a lot of Chinese interests as far as their commodities. The Chinese cut out a whole range of normal staples that they purchase from Australia. China is the biggest customer to the Australian, the whole continent of Australia, as far as multiple businesses are concerned. So I think that it's going to be really hard as we head into Brexit and these other things and the global shutdowns, that the Australian dollar is going to remain firm. If we have a breakout of 73.41 up here and make higher move highs, well, then that's a confirmation of higher move highs and higher move lows, meaning bullish trend, and then that would end this corrective move that we've had to the upside, and then, or excuse me, to the downside, confirming that this Australian dollar is that strong versus the U.S. dollar. I only see that if the dollar index starts hitting its lows again, and all of a sudden you see, if you have a breakout to the upside in the pound and the euro, and especially if you see the Swiss, the dollar collapse against the Swiss, well, then I'm on board to see Australian dollar make long-term highs come up in the not-too-distant future. But because of the rationale that I gave you, I don't see that happening. Now let's go to the New Zealand dollar, U.S. dollar. So the U.S. markets are now open almost a half an hour. Here we have strength. Now this one has been stronger. Now this doesn't have the issues that the Canadian dollar has. So this one's a bull. I would key off of the 68.08 level for support and direction. Anything below here, I think you get a nice sell-off still. Not that it would be bearish because this thing's been making higher move highs and higher move lows. We do not have a major sell signal. I mean, we do have this. This is a short term. Let me move this over so I can get this done. The high that was set here, this is a short term sell signal. This is a dark cloud cover. So this would be your real line in the sand. Like if you want to be an aggressive bear, selling against this level is probably not. It's a low risk trade. You have a good area of to break back down to. The question is, though, with this momentum, is it going to really be able to manifest itself? So I would key off of the high from 2 sessions ago and the low from Friday as your bias for which way this market's going to go. If we take out this low here, then I could see a nice corrective move going back down towards this 67.5 area, even get down to 67 even, and take out this upward sloping support line. It is pretty steep, this trend, if you think about it. If we take this out also on a longer term basis, that would confirm more strength in the U.S. dollar, and most people are giving it credit, and probably setting a tone for a range with the New Zealand dollar, because Like I said, I don't see this becoming a very big bear versus the dollar. Australian dollar, totally different story. I think that 2021 may be the year of major divergence in major currencies, because we've been having a major trend as a whole versus the dollar with all these currencies. I do not see that continuing. And especially once we find out what's going on with the U.S. elections. A couple more weeks away, though. U.S. dollar Canada planted a low a little over a week ago, but it is overall a bear. It set a lower move high 2 sessions back. Now you can see today it's kind of on support. It's right in the middle of its range for the day, but overall this market is a sideways, neutral at best trade. We have an upside target band, and this is the key. If we do break out above the high of a couple sessions ago at 131.77, I can see us nudging these pivots here, trying to figure out whether or not just a retracement to the upside, or whether we do have the brewing of a U.S. dollar rally versus the Canada. Below $1.3177, I find it hard pressed to be very, very careful selling. Selling against this area is good. But buying against it right now, it's just choppy, and it's too tough to tell. So I'd be very cautious with the U.S. dollar Canada trade. So Euro US dollar, which is where we started off this video, let's see where it's at. It is still negative on the day, kind of sideways, not a big range. What's the range for today? It's a high of 118.69 to 18.14. You got a 45 pip range there. It's not very much. So not very much action on a Monday morning as the U.S. markets evolve. Let's see what happens with that, see if they can shake things up. Key off of these areas, like I said, that we have here, and we'll see how things go. We have the beginning of the week happening. We have a lot of areas to look at. Remember, only a rally above $1.1921 has us on an upside breakout. And downside breakout, you gotta get down to 115.98. So we could be in for a yawner as we head into the next couple months. Be careful, wait for a signal. Like I said, we had this one here. We hit the target zone. So now, if you want to sell against this, well, the trade's already been done. But I think you want to lean still towards that bearish side. So anyhow, remember to subscribe to our YouTube channel and check us out every day at www